Let's go right now to our market watchers, Alan Knuckman. We have Rebecca Walser, and we have Francis Newton Stacy. Good to see you all. Alan, there seems to be a real divide here between what's happening economically and what's happening within the markets, right? Two different things. You got all the volatility in the markets, and yet the economy sort of looks pretty good, right?
Oh, yeah, definitely. It's been a sentiment shift, and the psychology has changed to very negative. Now, today is the beginning, possibly, of a bottom. If we can build on this. Now, we just remember, we were negative early in the session, so we made new lows and a higher close. That's very positive. But a lot of this seems to be a short squeeze today. You need some follow-through on this. Now, we could also see some additional price pop potential with the president talking, about this is a good time to buy. He could also construct some certainty with some trade sentiment or maybe some deal that would give this market another boost to the upside.
Yeah, it just fascinates me, Rebecca, because the markets tend to run, 6 to 9 months in advance of the economy. And so investors are always trying to predict where the economy's heading. And I would just say in this particular case, there's nothing out there that tells me 6 to 9 months down the road we're actually going to be in some kind of recession, which is what you hear a lot of people on a lot of different networks talking to. Almost a little bit of glee in their voice, I would add to that. But I don't see the recession happening because I think that the fundamentals are just too good. So, if I'm right, does the market catch up?
Trish, this, the other networks want to bash Trump at every second they can. So obviously, his strong economy, his good fundamentals, the great labor market, the great GDP numbers we've had this year, they're not going to give him any credit. So anytime the market's, volatile, it's all Trump's fault. What's really happening is that we do have strong economic fundamentals. They are there. The labor market, GDP growth, but we do have a lot of geopolitical things going on. The trade, obviously with China, that's looming. The 90-day truce is winding down. Obviously a lot of uncertainty in Washington, as you just mentioned in the last segment. So we have a lot of uncertainty, and investors like certainty. So the market is I think it's just mixed signals, like what's going on. Obviously, 2/3 of our economy are our consumer. So low gas prices are great for them, not so good for energy stocks. So you just have a mixed bag of all these things going on, Trish.
Yeah, and Francis Newton Stacy, you add to this a pretty confident consumer right now, because you look at these shopping numbers, and I'd say it's impressive.
Definitely. So I agree with you that the market is a leading indicator for sure. And I think that whether the economic numbers and the fundamentals are sustainable is going to be determined by strength in the credit markets. You have the Fed reducing the balance sheet on autopilot at $50 billion a month, $600 billion next year. You have, we don't know what's happening with rate hikes next year. So those things are all going to put pressure on servicing the debt. As long as the system can service the debt, then these economic numbers are sustainable.
I'm actually not fearful of that. And, look, we've all been through 2008. Alan, I knew you back then, and we spoke a lot back then. That was a systemic crisis. That was a credit crunch. That was a problem. We don't have anything that's similar, right, to that out there right now. And by the way, I knew you and I were talking about it months, if not years, before it actually hit. When I look out on the horizon, I'm not looking at the kind of credit crunch a la 2008 or anything even remotely similar to it.
Right. It's a very different situation. I think that the stock market's had a big move to the upside, and so this was some gains given back. But if you look at the numbers, the EPS growth for 2018 works out to be 20% for S&P 500 stocks. That's an incredible growth rate. Companies are doing extremely well, and like you keep talking about, the fundamental facts remain. This is not a systemic problem, and I think we were spooked a little bit when someone told us not to be concerned, because I get concerned if someone tells me not to be concerned.
Yeah, then you get concerned. That was kind of a bad move.
And then we get it sorted out.
Yeah, and the other thing I'd add to this, and I'm going to talk about this on my program on Fox Business tonight at 8 p.m., is that the Fed is not really what you need to be worried about right now. I think it's the prospect of more regulation, a la Maxine Waters, right, and the banks. I think it's the prospect of higher potential corporate taxes. I don't think they'd ever get it, but they're certainly going to try, a la Nancy Pelosi. And so you have some real political concerns that could actually get in the way of meaningful economic policy, and that is the threat, ladies and gentlemen, right now. We're going to leave it there. Thank you so much to all of you. We have much more on the president's surprise trip to Iraq and what